I want to touch on something that we haven't talked a lot about on CNBC, but deposits and deposit risk. JP Morgan and Wells Fargo both saying that they had lower deposits. Coming up, we have Bank of America, a big consumer bank. What are your expectations when it comes to deposits?
Yeah, good morning, Frank. So sure, deposits have been a worry spot for banks over the last 4 quarters since the March failure last year of banks. And look, that's going to continue to be an issue, not just some deposit runoff, but higher deposit costs for deposits that stay. So it's produced some pressure on the net interest margin, certainly, and I think that's one of the reasons why, typically as a bank analyst, you hope for higher rates. Banks are asset sensitive and tend to benefit from higher rates, but at this point, higher interest rates have, I think, worn out their welcome and are really starting to crimp loan growth as well. Kind of double-edged sword
Right.
there.
Yeah. I think they've worn out their welcome with the consumers as well. Important to note, Morgan Stanley and Bank of America both trading negatively or trading lower right now. One other thing we've been talking about and really wringing our hands about is commercial real estate. We had the CEO of JLL on our air just a few weeks ago saying that the commercial real estate market is bottom. What are you expecting when it comes to commercial real estate and also loan loss provisioning?
So commercial real estate loans have gotten a lot of headlines, obviously, but honestly, they've not really turned problematic according to the banks. They're setting aside a bit more in terms of loss provisioning there. They're tightening underwriting standards. Of course, when these come due for renewal, you've got less cash flow from the properties, the higher vacancies and so forth. So it's a slow train wreck, not a kind of a high speed crash, we would say. Broadly speaking, loan loss provisions are very robust right now. They've actually come down mostly in the first quarter. So I think that's saying banks are saying that they're pretty pleased with where credit quality stands right now.
All right, you have a buy on Goldman, Morgan Stanley, and Bank of America, three of the banks we're talking about. But do you have one that's a top pick in this space right now for investors going forward?
Well, JP Morgan tends to be the standout, of course. It's a standout on loan growth, on
Right.
just the market share appreciation that they get in across most areas of investment banking. Very well reserved, great management team. And even without the First Republic edition last May, they showed greater loan growth than most other banks. So it tends to get the kudos, I think, from most analysts. Morgan Stanley, of course, has a great business model, wealth management doing great. Asset values up 20% over the past year. And I think investment banking looks like it's about to embark on a bit more durable activity after some false starts in 2023. So we look for better activity there as the year goes by.